Good morning, everyone. It's JJ from Micro Futures. Hope you're having a wonderful weekend. Doing my weekend update here. Get it out before you guys wake up in North America. And so we have a little liquidation finally. We had our move up, right? Nice move up. Beautiful distribution, right? For these days. So, it's a market. You take your cheaper inventory and you mark it up and you sell it for as long as the buyers come in. It was a good selling cycle. And now mark it down, put it on sale. And now we're trying to find the bid. So we filled the gap that was here. We filled the gap that was here. Those gaps are now filled. They have they have been filled. And yesterday at the end of the day, we went and filled this gap here. So that means that we had enough supply to fill the waiting bids in these areas, right? From the short sellers who were trapped on the way up. So, what are we looking at now? The big levels for us are 55.84, 53.42. The middle is 54.63. And we broke that on Friday. You can see all the volume from Friday is under 63. So now we have what we had was we had people who were long here, they liquidated. People came in and started short covering here. That provided stability, which tricked a lot of swing longs into getting long in this area. When this low and that low started to break, liquidation started to happen. And when we took out that low yesterday, a ton of people who had their stops here, right? They started jumping out of this thing, right? Swing traders, even the ones who take a lot of pain, they started to get out. So the other thing we're going to look for these lower levels, 53.82 and three quarters, 53.62 and 53.42 and a half. Those are our major levels to the downside. Want you to take a look at something that's kind of important. We closed underneath the low of RTH, the low of the last half hour and the low of, the established low of Friday's regular trading hours. We took that out in the last hour of the day. That's why I always watch end period. So what you folks need to do is treat this almost like a spike, even though it's not technically a spike. You have a move down from 54.10 all the way to 53.94. We did close above 5,400. That's all right. We took out that poor low, and that's gone now. That was from where that last gap was. So look for some liquidation or at least trade between, if we don't liquidate and take out 53.94, look for back and forth in this area. Now, I'm going to show you something using the 1 minute that I think might be helpful. So once again, we've got our 1 minute chart. That shows the liquidation from that spike that we had. These are 1 minute candles. So I want to show you now when the market liquidated, how we establish a balance and a cost basis. So if you can see when the market started to liquidate and we broke, if I just drag this through, you can see the volume here. This is all that liquidating supply being absorbed here, either by short sellers or wholesalers. And then we go up a little bit here, right? To sell a little bit because, dealers are long, they have to take it in, they get rid of it, and then the selling comes in right near that base of that move. So now what happens is that exacerbates the selling, and you watch that spike under 54.24, that big chunk of volume. As we go through this, you can see that's where the majority of the position is. So then what we do is we use the balance rules that our market profile forefathers have given us. So I use this balance from 54.12 and a half to 54.24. It's based on the position. So none of this is based on indicators or anything. This is actually based on the business of trading, right? The business is, to acquire inventory, mark it up, or in cases like this, we're going to see, let's look at some downside targets for RT for the Globex Open. So we've got 12 and a half to 24 and a half. It's a kind of a big range, but you can see that that's where the volume was. Now what we do is we simply double it to the downside and double it to the upside to help us get some sort of semblance of where we're going to have to mark inventory down to. You can see there's a look below and fail of that 5,450 there. So watch these levels on the Globex Open, that 53.88. That is a target if we open and get underneath 5,400, right? These levels can keep you from getting short in the hole if we accept over 5,400, right? Don't short it underneath, right? But if we accept underneath 5,400, you could be looking at that candle there, which is the low of Friday, and then 53.88. Okay. And if you want to double it to the upside, just in case, maybe, we get lucky and the liquidation doesn't continue, right? These will be our upside targets, right? Now, this is based on a 1 minute chart and it's based solely on inventory, right? And we've shown you where the inventory is. So now if we take our volume profile and drag it across, we can give you some idea of how to do business on Sunday night. See, there's that inventory. You can see there's very little volume down here, right? There's very, very little volume in this area. So if we do get a move up, you can expect some selling at 54.12. Why? Because there are people who are trapped long above 54.12. Okay. So what we can like to do, we love trades that are based on these levels. Like say when the market looks above and fails, you put your short order in here, right? And now here's where you manage your risk. You have to figure out what's appropriate. Using the top of that candle, that's too big of a stop. So we could zone in a little bit, find some structure maybe, and put a stop somewhere here. You're short underneath this level. And as long as 24 and a half remains to be offered, the offer keeps going underneath it, your target is 54.12 because the balance is working. So that's a beautiful way to trade. So you're not trying to catch the high. You wait until you see sellers. When you see sellers, you engage, you do a little bit of covering, right? Another nice trade we like is when the market goes up and comes back down to one of our levels, fails to take it out. You can go long here, put your stop a little bit under that level, and your rotational target is that way. Nice trades, and that way we love trading in these balance zones because your sandbox, you have clear risk, areas where if it breaks these levels, there's no sense, there's no business reason to be in the trade. Now, folks, remember, if there's no business reason to be in a trade, you should not be in a trade. That keeps you from doing all this FOMO and all that stuff, right? Just remember, every trade is a business decision. Once the business decision for that trade does not exist, there is no reason for you to have your capital at risk. Think like that. Think like a pro. If you want to learn how to trade with some common sense, right? If you want to learn how to be consistently profitable, no pie in the sky, no double talk. We teach you how the business was done, you know, old school blue collar trading for people who actually want to earn a living. They don't want fancy double talk. Come check us out at microefutures.com. We have a 7-day trial. Come check it out. And then we also have our one-on-one mentoring where, I take you on and I basically work with you for life. It's a one-time fee. You'll see a lot of other trading rooms charge huge money for mentoring. When I take you on for your entire trading career and I make sure that you do what you need to do and it doesn't matter how long it takes. So come learn how to trade with us at microefutures.com. I'm JJ. I hope you have a wonderful weekend. And like I always say, stay out of trouble. And those of you who can't stay out of trouble, don't get caught. Okay. Have a safe and wonderful weekend. Bye for now, everyone.